Let's go. All right, family, what's the vibes? How you guys doing? All right, so like I said earlier in the week, there are certain things I want to bring to your understanding that I feel like, will accelerate your idea on price, right? And I'm saying that with so much confidence because I know it will, right? And we're just really going to get into it so that we don't have too much talks on that. Right. So we're going to be talking about understanding liquidity. Now, liquidity is a term that has been thrown around a whole lot in the industry, especially if you trade institutional trading, right, which we do here. But we're going to go into deep dives on, the utility of it, right? And we've done a great job so far with what we've talked about it, and we're just going to expand on that idea. What is liquidity, right? This is the measure of buyers and sellers that are present and whether a transaction can take place easily. Now, this is the definition of liquidity. Now, for a while now, I've talked about liquidity as a point in the marketplace where money is resting. And I use that, or I make that definition so that you can clearly understand, so that, traders can clearly see it while they are making the analysis or taking a trade. You can clearly understand, oh, this is why I am, buying or selling to this level. And what it really means at those levels, which are highs and lows, is that there is an exchange. There are buyers and sellers present, and a transaction can easily take place. There's no transaction if there are no buyers and sellers. So at those highs and lows, right, we have buy stops and sell orders happening there where we can then see, okay, transactions, being take place, or transactions take place easily, right? Why is liquidity important? One, it helps us determine future bias and direction. We know that if I'm buying, I'm aiming for buy side liquidity. Those will be target levels, right? If I'm selling, I'm aiming for sell side liquidity, old lows, which will be, also target levels. So it helps us understand, the next direction or possible direction for price. Two, it provides insight into possible targets and stop loss areas. So the same thing, right? Majorly the same thing. We're not just determining, oh, are we bullish or bearish with liquidity? We are also thinking about where exactly, right? Where exactly, what old high, what old low am I thinking about? And if I'm aiming for an old high, my stop loss is possible or is many times or would many times be at an old low, right? Thirdly, it will tell you when the market is low versus high probability, right? This is what liquidity helps us do also, right? Am I trading in a low resistance liquidity condition, or am I trading in a high resistance liquidity condition? We're going to go deeper as we go into the lesson. We're going to see all of that, right? So I'm able to tell, oh, am I supposed to be engaging price right now, or am I supposed to just sit on my hands? And that brings me to a quote by Jim Rogers. Jim Rogers is one of the finest stock managers, finest fine trader also, right? And he says this. He says, I will just wait until there's money lying in the corner, and all I will have to do is go pick it up. Right. In the meantime, I'll do nothing. This again emphasizes the idea that one of the things that you do as a trader is sit on your hands and do nothing. And when you are doing that, when you're doing that, you're trying to figure out where would there be, where is the opportunity? Where is money piling up? And we're going to understand that as we move forward. Now, we're going to understand what pool of liquidity means. What is a pool of liquidity? A pool of liquidity really just means more and more orders present in the marketplace. So it's just the accumulation of buy side or buy orders or sell orders in a marketplace, right? And this is it, right? Let's look at this, right? So let's say I'm buying here. Let me use a lighter. Let's say I'm buying here, right? And I'm buying with probably 5 lots, right? What happens, right? As price starts to go higher, I'm in profit. My orders have been booked, and it's going higher. Now, let's say at a later time, as price was returning back down here, Benga also buys up here, right? Now, what has happened? We have one buy order inside of here, and Benga's order makes it two buy orders. What does that mean? Right? It means there are multiple orders, right, inside of here. This is what a pool of liquidity means. Now, if we're going to be buying, right, our stop loss will technically be somewhere around this level. That didn't look good, right? Our stop loss will be somewhere around this level, right? So we'll have stop loss. Let me just write S here. Stop loss around this level, right? And we have one buy order, two buy orders. So what is this? Now, if you think about this, this is what a low resistance liquidity is. A low resistance liquidity is when price is failing to take out, sell side liquidity. And what that means is at a later time, price will easily move through this. Why? There is a pool of liquidity present in the marketplace. Right, let's look at this. When the market fails to take out previous swing, the existing orders in the market still stands, therefore creating a pool of liquidity. So the fact that the market ran higher without coming to take out this low is what? Is proof that, oh, the buyers are still in control. Let's say it like that. The buyers are still in control, or buy side is still in play. And this is what, higher highs, higher lows means, bullish market structure. That buy side is still in play. We'll see old lows, remain. And would see price, just climb up higher like that. But what is happening inside of that is there's a build-up of liquidity in the marketplace. There's a build-up of buy-side liquidity in the marketplace. Now, this is what is called also failure swing. That price is, coming very close to an area of liquidity, but it's failing to take it out. Right? Because you agree with me that because me and Benga are buying inside of here, we would have stop losses, or we would have our money, right, which would be the risk of this trade, resting below this low. So as price starts to return back into this level, that would be money being grabbed inside of here, or stop runs, happening right down there, right? But as price starts to climb or continues to climb higher, what we have what? A pool of orders being built up, right? And we have buy side liquidity in play. Now, let's look at the second example. Now, the second example gives the other idea. And when we look at this, what is this? In this case, right, we have sell side liquidity. So again, let's say I was buying here, right? Let's say I was buying here. Let me use this one. Again, let's say I was buying here. May is buying here. And what happens? As soon as I bought, price just boom, ran all the way lower and took my stops, right? The red line is my stops. Let me just mark that out. The red line is my stops here. My S is very crazy, but take it like that. Right, so price takes my stops inside of here, right, and moves higher. Right, I'm sure you'd have gotten into trades where you are buying, you had your stop loss, being put, and what happened was there was another Judas against you, there was another manipulation occurring, and price took out your stops and then moved in your direction. Pissing type of scenario, but it's something that happens to us as traders. Now, this again, what has this created? Now, all the orders, that were filed inside of here, or all the orders, again, stop loss liquidity, right? Sell side liquidity is right down here, and that has been exchange, or that has been filled in. Right, when the market succeeds to take out previous swings, or takes out a previous swing, the existing orders in the market is filled, right, and essentially neutralized before reducing the amount of liquidity in the marketplace, or therefore reducing the amount of liquidity in the marketplace. Now, I want you to think about this. I don't know if you guys understand the order book. You can just search it up on YouTube and just watch a video or two, right? I don't use the order book because, you can clearly just from price understand, those details, right? And now what the other book tells you is the amount of liquidity present, or the amount of orders present in price, right? And in a scenario like this, right, you would have the orders essentially present, right? The orders are going to be there and they won't be booked yet, because we just have, buy side orders. There's just a pool of liquidity, going higher. In this case, what will happen is there's going to be, or the order book is going to be filled at this point. Let me say it like that, right? As price takes out this low, the order book is being filled, because now we've had sell side liquidity, or we've had buyers being trapped inside of this level. And you'd see this happen so many times. It's one of our checklists to get into a trade that we want to see price run out sell side liquidity. Essentially, what you're saying is everyone that was going long inside of here and has their stop loss, we call them early buyers. As price starts to move higher, people start to move their stop losses, higher, right? And if there's still one more run, probably they were buying too early or whatnot. Price takes them out and boom, they are trapped inside of here, probably not able to get in. Some of them would immediately go into sell side, and it's just going to be a disastrous day for them, right? And this is it basically. So when price takes out sell side liquidity, these are the two scenarios that we're going to have when we're dealing with liquidity. One is low resistance, one is high resistance. Now think about it. When price is returning at a later time, right, it would be easier for price to run this low because there is a pool of liquidity. There is money resting down in here that has not been filled. But in this scenario, we would see that if price is returning back in here, it's going to be it's not that price cannot return back down into this low. It's just going to be harder. And this is information that we already know before, right? And I'm opening it up to you so that you can, visually, or you can have more understanding on how or why not to engage in high resistance liquidity run scenarios, because just taking that out of the picture allows you to fall in the place where you can really just see where the money is resting and you can join in, right? And if that is not happening, if scenarios like this are happening, you are doing nothing. Sorry. Sorry, guys. All right. So now what are we looking for? When planning trade ideas, we're searching for price levels that are clean, low resistance liquidity. Now that means that as price starts to rally up inside of here, obviously we'll be looking for a key level, a higher time frame premium where we can expect a reversal, right? And we're going to go into the charts and see all of that. I want to do what? We want to sell price back into clean levels like this, right? So we are expecting price to run into clean levels. So again, when planning trade ideas, we are searching for price levels that are clean, low resistance, and don't experience clear stop runs. So we're not expecting levels like this, and when price now rallies higher, we're trying to sell. No, that's not what we're doing. Our buyers should align with a trade that makes sense to these levels. So that's going back into technicals, going back into, okay, I'm bearish and I'm seeing levels like this, right? There's so many ways we've talked about this. We've talked about this in the line of, the retailers having their trend line patterns. It's the same thing. Orders are being piled up as price continues to go higher. There will be more and more buyers as price continues to form lower or higher highs and higher lows, right? And what that is building up is a pool of liquidity, a pool of sell side liquidity inside of here. Remember, their stops are going to be below those lows, right? And that's what sell side liquidity is, right? And what we're trying to do is, as price gets to a higher time frame key level, we're trying to aim for these lows, right? Now, next thing, we can also use the creation of high resistance liquidity points to tell us the market has neutralized or trapped traders on the wrong side of the market to continue in the other direction. Now, so this is the second scenario, right? The second scenario is when we see levels or when we see plays like this, right? I would strongly advise when you're looking at this, you're not just thinking about a measly wick just taking out this low. You're thinking about a strong close below this low. That is going to give you, a much more broader that gives you a much more broader look on a stop loss or a stop run happening, or traders being trapped in this level, right? A week, essentially, the way I think about weeks is a week can come down in here and I still look at price, returning back lower, especially if my bias aligns with that, right? So now when we see price take out old lows like this or old highs in this format where it comes to take this, we essentially see this as, traders being trapped down inside of here, just like I've explained earlier. And all we need to do is to get on board. Now we're done with the boring stuff. Let's actually go into the charts and really just see all of these things, how they play out. So we're going to use a very recent example, right, which is NFP yesterday. Now, if you think about what has been happening before NFP, what have we had, right? From Monday, we opened and we've been rallying higher. Now, this is the reason why I wanted to bring this to to forefront, because this is essentially how many of your weeks play out, right? It opens, runs higher, and expands lower, right? But you can have a good look on it. And what I mean by that is you are able to see long term where price is moving into. So it opens on Monday, and what does price starts to do? Just starts to expand higher. Obviously, you know this is a red flag, and we already have a condition to this on NFP weeks that we can see that rally, right, happen from Monday going into Thursday, going into Friday, which is the day of NFP, and then the candle of NFP centers down lower, right? But let's leave that, right? What we want to see is, let's just look at Thursday going into Friday. What do we see? We see price form a low, expands higher, forms a low, expands higher. So you can just think about it. May was buying down here or buying down here, has a stop loss inside of here, breaking market structure, buying that fair value gap and breaker like you would normally do. Price expands. And this is where Benga is looking at his play, right? Benga buys in here, expands. Wale is looking at it here. As it comes here, what is happening, right? And as we are buying, for some reasons, we're expecting what? We're expecting some higher time frame level. We're expecting some buy side liquidity. We can, let me see if we can look all the way back, but or if not, let's just do this. This is the level we're expecting, just hypothetically, right? This is the level that we're expecting as our target for some reasons, right? So I buy in here, Benga is buying here, Wally is buying here, Mbiolide is buying here, and we're getting up into here. Well, price is moving higher, we're excited, that, oh, this is what we want to see price do. We want to see price get in here. Let's say we're newbies and we don't know what NFP is. Now, what does price do? Now, this is what we're saying. As price starts to do things like this, we can anticipate price cleaning up levels like this. Why? There is now a pool of liquidity resting right down here. It is easier for price to move through these levels. Now, if you look all the way down inside of here, you'd see this. Now, the way I want you to think about it is, I want you to think about it as internal range liquidity to external range liquidity. So when price is going to be running out sell side liquidity or running out the pool of liquidity inside of here, there's one thing you need to confirm. The thing you need to confirm is, and it's very, very simple, very, very straightforward. When price is going to do it, what we're going to see is we're going to see price run out buy side liquidity, return back into the range as should normally do, right? But fail to take out buy side liquidity. And that's going to be the indication. Remember, the failure swing is price is going to trap those buyers in, right? Price is going to trap those buyers in by this run on buy side liquidity, drop lower. But now, what is the confirmation that it's not just going to keep going higher, right? There's going to be another swing high formed, but instead of being a higher high, it's going to be a lower high. And what does price essentially do? Boom, expands to sell side liquidity. Now, the simple way that I want you to understand this is, if I am going to be a buy, if I'm going to be a seller in price, I'm looking for a point where price takes out buy side liquidity, right? Runs back into the range, breaks market structure, forms a lower high, right? And I'm aiming for levels like this. If you go through your charts with what I've just shown you, you would be amazed. You'll be amazed. Right. So what am I saying? What am I saying? This is what I'm saying, right? So price starts to run lower inside of here, just to give you a bullish example. Price starts to run lower from here, breaks, returns lower. What is happening? There are more sellers getting into price. There are more sellers getting into price. And what would be here? A pool of what? Buy side liquidity. This is what you want to think about. This is what you're waiting through. This is the manipulation phase. Now, what happens down here? Price breaks market structure, right? It's the same thing that's been happening to here, that's been happening here, that happens here. But now you have a little bit more context. There's a higher time frame level in here, fair value gap inside of here that price is running into. Let me just show you like this. Price is running into a higher time frame level, fair value gap, and now expands. So when you use this idea I'm talking to you about liquidity and blending with the other things, you have something very big, right? So price expands, breaks market structure, returns back into the range, but see, it's forming a lower low here. It's forming a lower low inside of here, and then what? Boom, expands into where? All of those buy side liquidity, all of those, yes, buy side liquidity inside of here, all of the pool of liquidity resting down here. This is what low resistance liquidity run is. So the moment you can find, oh, we've had sell side liquidity, external range liquidity is being taken, price would move into internal range. But internal range how? Internal range that has lower highs inside of here, because there would be resting pool of liquidity inside of here. So it will be easy for the market to switch. So what you are trying to do is you're trying to spot where the exchange happens, which again, you're going to think about key levels on the higher time frame, where those exchanges will happen, breaking market structure for confirmation, and then you can aim for those levels. Right? It happens back and back and back and back again. Right? We have all of these highs, engineered higher. Price takes out buy side liquidity, then forms a lower high. As soon as it forms that high, what you would notice is the next high is a lower high, and then price runs to take out what sell side liquidity. This sell side liquidity could be equal lows, could be, a whole lot of things, right? But the idea is I am thinking about how price has engineered buy side until we get to that key level. This is what I want you to think about, not just, oh, I can see breaking market structure, I want to sell, right? You might just be selling and just be taking out this low when there's a whole lot more to be faking, right? And how do you know that? You can just see by how price has engineered going into the higher time frame level, old high in this case, previous day's high has been taken out. I want to expect previous day's low. Another confidence that you would use to expect that is seeing that before that has happened, before price took out previous day's high, what we've been seeing in price is an engineer to buy side liquidity. We have been seeing price form a pool of buy side liquidity, right? So essentially, on the order book, no orders have been neutralized here. No orders have been neutralized here. We just have sell side liquidity resting up inside of here. And now that we've picked out buy side liquidity, what will happen is these traders are being trapped above these highs, right? And think about hedge funds. They're going to be expecting, they're going to be expecting continuous movement, just like you do, when you're in a trade and you just want to see price move in that direction, and you can see that probably it's time for you to take stop loss, or take profits, but you just want to see price expand. It's just how we think. You have to, condition your mind to think in a different way and obey the rules that you set for yourself. If not, you would constantly be in that mindset where you just want price to continue to move in that direction. I see it happen with biases too, with traders, right? You have a bias this week, but because of that bias worked out, or maybe did not work out, you want to see that bias continue in the next week when price can just typically be showing you something. So for the first example, we've said, right, we can join this play by understanding that there is a draw on liquidity here, probably a fair value gap and old high. And what that would mean is as price is returning back into the range, we're thinking about buys. As price is returning back into the range, we're thinking about buys. Now, the moment price does what? Take out buy side liquidity, meaning that if I am buying, or if I'm in a buy scenario, right, or if I'm in a buy scenario, let's say I'm buying inside of here and price takes out this high, but for some reasons I still want to see price continue higher. What I need to do as price starts to break down here is I want to watch, why are these highs not going back to take out the buy side, right? And one low might not be enough to judge that, right? Price taking out this low might not be enough. It might mean that price needs to take out this, because obviously price can take out this low and then still expand higher. But what I want you to watch in the breakdown of these lows here is you start to see bearish market structure play in here, where highs are being protected. So as price is taking out this low, it's failing to take out old highs. And this would be, an indication for you to cut down your trade, right? And say, oh, okay, yes, maybe I was expecting some level up inside of here that price should get into, but what this is playing inside of here is showing that there's been a stop run in here and possibly price is moving into sell side. That's going to open your eyes to starting to see things like, oh, this is an old high, so that's a reason why we can start to reverse lower, right? And possibly give you a reason to, maybe on Friday of this particular day, join price to taking out what? To taking out sell side liquidity here like this, right? So I want you to just start to get into your charts and see levels like this, where there's a pool of liquidity and where the trap happens. So your assignment is going to be, I want to get into price and I want to look at when the trap happens, what was there that caused the trap? Was it a bearish order block? Was it a fair value gap? Was it an old high, old daily high, old weekly high, whatever? what key level was down there, so I can understand those. You already know the key levels, so this is going to be easier, because as price gets to those levels, you would understand, oh, this is a point where I'm expecting reversal. But now what we're dealing with is I now have, levels to expect for a trade idea, right? And I was showing NZD USD last week Sunday. I did a video, and it's the same thing. And price played to perfection, on this particular idea, right? And it's the same thing. Look at this. Let me see if I still have the analysis. Price returning back into premium. I think I still have the analysis here. Price returning back into premium, into the premium part of the range, or premium point of the last range formed, stopped by an OB, that's the OB inside of here, and respecting a CB, that's the CB inside of here, picking up previous week's high. I think this is a weekly bias, right? Stopped by the OB, respecting the fair value gap inside of there. Let me take out that. Respecting the fair value gap inside of here. That was the reason I wanted to sell. But the reason why it was a good sell is we have engineered buy-side liquidity. Can you see? Low, higher low, higher low. Now we're getting back into the premium part of the range. And when I just look back to the left inside of here, I can see that there's been a run on buy-side liquidity. Right? And price has broken back inside of the range. Now it's returning back into premium. There's a pool of buy side or sell side liquidity resting inside of here. There's a pool of liquidity resting inside of here. And what I want to do is engage that, which was exactly why I was, sending out that idea, and I was also trading it. Right. So what does price do here? Expands. Again, if you look at it on the daily time frame, you see the same thing playing out. Price takes out what? Buy side liquidity, right? And what? It would return back to that range. So this is trapped liquidity, right? And moving into all of what? Moving into all of the engineered pool of liquidity, all of the engineered sell side liquidity resting here. Higher lows. So higher lows means that what? There's money resting down inside of here. There's more money resting down inside of here. There's more money resting down inside of here, because all of the buyers that are here, imagine buying in here, you're still in profit because your stop loss is still what? Down here. You're still in profit. So don't just think about it, with how you trade. There are a whole lot of diverse traders, and they all take losses. So if that is true, there's somebody that is still holding up this position, right? And his stop loss is down here. Maybe he has taken partials, but still has a heavy position down here. What will happen? At a later time, right, price is going to return back here. Your job is to figure out where does that shift happen. And it's going to happen in the same way. Price will take out some buy side liquidity, maybe a daily high, maybe an Asian range high, right, and start to engineer lower, and you can then target these levels, low, low, and lower, like that, right? And when price takes out this low, that's your job, liquidity being met. Right, for this particular trade, I was just aiming for this low, right? And let me show you on the day time frame. There are a whole lot of trades, that you can just. So if you open this side up, you see, I'm just taking it to the left side because that's where the magic is. If you open this left side up, what do you see? You see lows, expand higher, low, right? But higher low, right? So if I bought down here, I'm still in profits because sell side liquidity is resting here and hasn't been neutralized. And price just keeps going higher and higher and higher and higher until it arrives at a higher time frame level, right? The break happens, then I can engage price, aiming for price to reach down into what? Those sell side liquidity, because there's a pool resting. When there's a pool resting, there's more money to be made. There's let's say like this, there's ease and speed to levels like that. So you would not need to waste, all year until price gets down here, because where the exchange will happen is where we have pending sellers, right? This is sell side liquidity inside of here, right? And we have those runs here, buy side. So buy side plus sell side, meaning that if there's going to be a transaction to happen, then buy side after this, remember, when price takes out this low, this is a good point for buy side if there are not more lows, right? So there's something I also wanted to explain before we go. If you go into your chart, you see so many examples, right? There's going to be a question that pops up while you do this. And that question is, oh, May, when you said when price takes out sell side liquidity, let's use this example. When price takes out sell side liquidity with a body, that could mean that, oh, we are now possibly bullish, right? But what you want to think about is make sure you have your confirmations. What do I mean? When price takes out a low inside of here, for me to be bullish, I want to see run above buy side liquidity, right? I want to see return back into the range and I want to continue buying. That's the first thing. The second thing is think about where the last stop run happened. When you think about where the last stop run happened, right? If the last stop run just happened up here, look at it. Price just ran out, buy side liquidity up here and started to drop. And this is a higher time frame level, bearish order block. If that just happened, price is not just going to let them lose immediately. If they are trapped, then they're going to be trapped for a while. This is why trading can really, really be tricky because the same thing is happening, but with time intervals. So it's going to happen inside of here that as they take out sell side liquidity, they are going back inside of the range. And that could mean they are going all the way back higher. Your job is to figure out where did the trap happen? Is there more pool of liquidity on this side of things? Then I'm going to engage price, trusting that price is going to get down into these levels because there's a pool of liquidity resting down here. Now, when price gets to levels like this or even equal lows like this is where you can, fix up your trade ideas. So if we just took out buy side liquidity, if we just arrived at that, higher time frame level, right? We're not just going to let those traders, those buyers, I'm not just going to let them lose because, a run on sell side liquidity doesn't mean that, oh, price has, invalidated buy side. That's why some traders will still be holding those positions like we saw on the daily time frame. They'll still be holding these positions because the price takes out sell side liquidity doesn't mean that, oh, I think my network is messing up right now. The rain just started. The price just took out sell side liquidity doesn't mean that, the buy side has been invalidated. Right. But if for some reasons you are seeing sell side based on the things you know, based on the things you understand, then you can engineer or you can work with price moving into those levels. Right now, I have to end the video. The rain is actually, messing up my network. But I hope you guys learned some things from this. I want to see your questions, all right, so that we can dig deep on this when we meet on Tuesday again. All right, family, I'll catch you on the next one. Bless up.